State Street Investment Management, the asset management division of NYSE-listed State Street, says it's behind a new strategy giving investors exposure to private market investments in retirement funds. Well, joining me now with more is Brendan Curran. He's head of U.S. retirement at State Street Investment Management. Brendan, welcome.
Thank you very much. Pleasure to be here.
Yeah, it's great to have you on the show. I see recently, just this past spring, you were named U.S. head of retirement. What is the focus for retirement at your firm?
Yeah, it's a really exciting opportunity for us. And retirement already, it's important to note, it's a cornerstone capability at State Street Investment Management. Roughly 25% of the assets that we manage are on behalf of U.S. defined benefit, U.S. defined contribution clients. The intent of creating this role was to create further focus, further commitment to the space, because it's an increasingly complex space. Individuals are living longer, more individuals are self-reliant in terms of their retirement savings, DB to DC, and capital markets are changing in terms of the growth of private market investing.
People want to have trust, right? That those funds are going to be there for them. So private market investments in retirement funds is a topic that is definitely gaining momentum. And we understand that your firm did pioneer private asset exposure in a target date fund earlier this year. What was the impetus behind that?
Yeah, we're really excited about the opportunity here for retirement savers and defined contribution plans. And really the words that come to mind for me is this idea of a diversification imperative. Target date funds really first got their start back in 2005. At that point, by our measures, private markets, alternative assets, were only 8% of the global market portfolio. 20 years later, they've roughly doubled in size. And so as we think about building target date funds, offering a well-diversified portfolio to retirement savers, it's increasingly difficult to do so if you're only building that portfolio from public markets. So the idea of blending public and private markets together is to offer that future-proof diversification to these individual savers.
Interesting. Now, you work with some of the biggest plan sponsors in the country. What are some of the concerns that they're facing?
Yeah, concerns are ever present. I think as a starting point, individuals, despite all-time records from a stock market perspective, remain begrudgingly sort of unoptimistic in terms of their retirement savings. And I think it translates into where their priorities sit. For one, they're looking to maximize returns, increase diversification, according to the surveys that we field. We believe private markets, continued evolutions of the target date fund constructs, afford them potential opportunities in that regard. Two, I think it's this idea of that movement from defined benefit to defined contribution, and the fact that when you survey individuals, they're really pessimistic about their ability to generate consistent, predictable income in retirement. And so how do we help the plan sponsor and therefore the participant with retirement income and defined contribution plans? And lastly, I think plan sponsors are cognizant of this widening chasm in terms of the growth in ETFs outside of the 401k space and sort of the lack of access to those products within DC plans.
So what are firms like State Street Investment Management doing to fill the gap and help clients with and investors?
Yeah, I think it's on a few different cases. I think obviously private markets is an area that we've already touched on. I think retirement income is a really important initiative for us as an organization. Again, a reflection of participant needs, participant demand. And lastly, it's this idea of how do we actually bring and harness the power of ETFs into defined contribution plans and really make them more broadly accessible within 401ks.
Okay, so we understand you've been following a development out of Washington that could impact retirement funding. Tell people who don't usually follow this regulatory news more about it and why it has the potential to revolutionize retirement investing.
Yeah, it's a super, what's technical, it's a nerdy or niche topic. I think it's a really important one. When you think about defined contribution plans today, on average, about 62% of the assets in this space are still invested in mutual funds. But if you look at the broader investment industry in the United States, mutual funds are in net outflow. And we're projecting that ETF flows will be over $1 trillion again this year. And so you're seeing this steep sort of difference in the broader market, but ETFs are still not accessible within 401k plans. The potential exemptive relief from Washington will allow us to create mutual fund classes hanging off of ETFs to tap into the scale and cost benefits, and also the innovation from new products that are coming to market in ETFs that we can now leverage in 401k land.
Anything else our viewers should know?
No, I mean, I think this is it. I think I'm really excited about the personal opportunity to lead the business and the opportunities, the complexities, the opportunities that exist for retirement savers.
Brendan, great to have you here at the New York Stock Exchange. We so appreciate it. That's Brendan Curran. He's a head of U.S. retirement at State Street Investment Management.
Super. Thank you. Appreciate it.
Thank you.